The world is changing. I want you to think back at how life was 10 years ago and compare it to how it is today. What you'll realize is that society, technology, and the world we live in is changing at a fast pace, sometimes so fast that it is hard to keep up. It doesn't matter what you think about this because this is reality. Now you have two options: adapt or die. For those of you who want to be 3 steps ahead, you have come to the right place. The time has come to take action and accumulate as much coins as possible. This is the opportunity to ride the wave instead of desperately chasing it. Welcome to the world of decentralized finance. Welcome to the future. This is the DeFi overview for beginners. In a sentence, banks are being replaced by software code as we speak. Long-term, the vast majority of transactions will be done with smart contracts. Similar to how email displaced the majority of snail mail, smart contracts will replace middlemen. Big picture. Up until DeFi became usable, Bitcoin and other major cryptocurrencies like Ethereum were unproductive assets in your portfolio. All you could do is buy and sell it or exchange it for goods and services. With smart contracts, you can now take loans against it or loan it out. Collateralized loan. Imagine a world where you could lend out money, knowing that there was collateral staked. On the borrower side, imagine a world where you could take out a loan for stable coins or US tokens without interacting with a bank. This is what exists today. This is quite important. We can look at simple examples of how this helps a cryptocurrency owner. Example 1. Say you have a sudden $10,000 bill to pay, for example, a medical cost. Instead of selling part of your 4 bitcoins, you want to pay the bill and have no taxable event. Congratulations, you now have an option. What you do is put your 4 bitcoins up as collateral and borrow $20,000. As long as you pay the $20,000 back and the price of Bitcoin doesn't drop significantly, you will successfully pay the expense, keep all your Bitcoins, and avoid a taxable event. All 100% by the book. Before DeFi, you would be forced to sell part of your Bitcoins, incur a taxable event, and use that to pay the bills. If the price of BTC goes up, you're buying at higher prices to accumulate the exact same amount of Bitcoins. Example 2. Say you're sitting on a bunch of crypto assets. You think that they will go up roughly the same. Just call them token A and token B. If you think token A and token B will both be up 10% over the next 12 months, then you're better off putting them into a liquidity pool and generating a yield. In basic terms, by putting the tokens into a liquidity pool, you allow yourself to earn interest on the assets. If you held them alone, you would only see price appreciation. By putting them in a pool, you get a yield. In a scenario where you think one token will go up massively and the other will not, you should not do that. You would suffer from impermanent loss. Example 3. If you have a choice between fundraising from the entire world's 7 billion population, or fundraising from a few banks that charge a 7% commission, what are you going to do? I think you know the answer, and that is one of the main reasons why DeFi is going to be extremely successful. The IPO fee of 7% due to relationships comes under direct attack. Many companies would likely say, well, I don't want random investors. Great. You can put the issuance schedule in a smart contract. What you're really saying is you don't want them to suddenly sell everything on day one. What do? You go through an ICO for $10 a coin, and make sure that people can only sell, for example, 20% after 6 months, another 20% after a year, etc. Now you're attracting the clients you wanted, regardless of where they are and how much they are worth. No one really cares about the name of the person who owns their coin or shares. They care about long-term commitment. Example 4. Long-term, the DeFi space and the NFT space will converge. What this means is that your digital art can be borrowed or lent. More importantly, physical assets will likely become smart contracts. For example, every single home in the USA is a NFT, or in other words a non-fungible item. If you can replace paperwork with code, you can reduce friction and add an immense amount of value at the same time. Thinking this through, if you look at interest rates, they will begin to vary. Someone who borrows $50,000 US token against a home would likely pay a lower interest rate when compared to someone borrowing $50,000 US token against a scam coin. Just like the real world, dangerous collateral would not have the same rate as safer collateral. All of this inefficiency could just be lines of code, the loan, the deed, the transfer of assets, etc. Currently there is too much red tape to cut, so it is more futuristic. Example 5. If we know that all items can now be traded 24/7 365, why would the stock market be limited to a weekday trading schedule? It would mean that all assets could be freely traded all hours of the week regardless of geography. The main issue here would be paperwork for all the regulations associated with buying and selling certain items. However, there is no reason it cannot be done. Beginning of evolution. Decentralized exchanges. Currently, the vast majority of people use middlemen to acquire stocks or cryptocurrencies. They go to a specific place such as Coinbase to acquire their crypto assets, and they go to a centralized broker like Fidelity to acquire stocks or bonds. Also, the central broker holds all of the assets. The only exception to this is really crypto, where the smart people take their coins off of Coinbase or Kraken and move them to cold storage where they can run their own node or use a hardware wallet, etc. Now, why does these centralized systems exist in the first place? The reason they exist is because people need an easy place to exchange goods. We go to supermarkets for food, go to brokerage firms for stocks, and go to drilling sites for oil. Some of these things cannot be decentralized. For example, an apple farm cannot be decentralized because you need a place to grow all of the trees. Now the fun begins. Why in the world do we need a centralized exchange to trade stock certificates? We do not. If you put all of these certificates onto the internet, it is actually a lot easier. You can see buy and sell orders from every single person with an internet connection. The only reason this doesn't work right now is due to regulations. If you think about crypto, there is absolutely no need for a centralized exchange, such as Coinbase, over the long term. Decentralized exchanges such as Uniswap, the 0x protocol, SushiSwap, etc. already do more volume than Coinbase. So, the future is a decentralized exchange environment. As a note to keep ourselves honest here, centralized exchanges will still exist. Large funds with tons of regulation involved will be around for a long time. The big picture is that the decentralized side will gain more mass adoption over the long term. Quick flashback. Individuals who are looking to fight change will say things work fine the way they are. This is the same thing people said about mail, phones and fax machines when the internet came out. Why is this so valuable? These centralized entities, like the banks and exchanges, all make tons of money. They have huge overhead costs. Just add up the operating expense line for any exchange or bank. It is insanity. Now imagine a world where there is absolutely nothing, and it is all done with software code. Now you're seeing the power of a decentralized exchange. As a simple example, part of the reason for a $30 wire transfer fee is the overhead costs. If there were no overhead costs, the wire fee would likely collapse. Creating utility with DeFi. At first there was no way to create actual utility from your coins. Eventually many protocols popped up that allowed you to earn yield on your crypto assets: Yearn Finance, Compound, Sushi, Unit Protocol, Bancor, and many more. Instead of simply exchanging coins for fiat money or vice versa, you created functional utility. Say you have $100,000 in Bitcoin gains. Instead of paying tax on this, you want to hold onto your coins and borrow some money. Now you can. You lend out your $100,000 worth of Bitcoins as collateral and receive $20,000 in USDT, which is convertible into fiat. This $20,000 loan comes with, say, an interest rate of 5%. As long as you make payments and eventually return the total $20,000, you keep all of your Bitcoins and you did not incur a taxable event. This is an enormous change for crypto, as you've replaced the entire loan and banking system with code. It is important to note, the cost of making the loan is practically nothing if you are using software code. Compare this to the banking system with their overhead expense, square footage, employee costs, electrical costs, etc. Futuristic. In the future, you can take any contract and put that into the same system. We are likely a few years away from this, but it is the future. A good example of this is Tinlake, which allows you to tokenize your real-world assets and use them in the decentralized finance ecosystem to take out loans. This is not a recommendation to purchasing Tinlake, it's just a good example. Scaling NFTs and DeFi converge. Since you've watched this far, the final step is streaming royalties. This means any sort of financial contract can be constructed in a smart contract. Imagine you can invest in the royalties or revenue stream of the next hit single, for example Kanye West or Ariana Grande. This benefits the artist as you cut out a bunch of middlemen. It also benefits superfans as they can financially benefit if their favorite artist has a hit song. This also incentivizes the fan base to go and promote the artist as they own a small piece of the royalty stream. Conclusion. If this all seemed like a lot to handle, that is fine. The real issue is that you're going to interact with these types of products and software ecosystems in the future. If you remember, when the internet came out, many people dismissed it and said they didn't need it. Now look where we are. Also, from a fun standpoint, everyone who adopted the internet early became fabulously rich. Anyone remember ringtones? Those $1 to $2 sales that are now worth nothing could have made a 16-year-old $1 million rapidly. This is not the same, however the opportunity set is comparable. That is it for today's video. It sure became a long one. Thanks to the DeFi education team who have created this amazing blog post. Make sure to subscribe to the DeFi Education Substack for more priceless content on decentralized finance. This video is the first in a series about DeFi. If you think this is an interesting topic you want to see more of, please let me know. Also, if you have any other subjects or topics you would like covered in this video format, let me know, and I might be able to make it happen. For those of you who skipped to this part and didn't watch the full video, here is a quick summary using only 3 words. Banks are zeros.